Hello everybody, welcome to another update on the stock screener. And today we're going to look into the tin market. So when I look at the tin price, I see that lately the tin price has been rising again. And I was wondering if this rise could continue. So let's go over the fundamentals on the tin market. So as you can see, tin is actually the most impacted by the new technology. You can see here that IT is going to use tin, electric vehicles, robotics, renewable energy. All of this is going to need tin, and this is the most impacted by all of these innovations. So that's the key here. You are investing in a commodity that is going to be needed in the future. So that's a very good reason to get into this commodity. Now, what is a tin price now? It's 30,000 per ton. Okay. So if you look at this chart, we are now at the high end of the cost curve. So this is 2016, but probably it's gone up a bit now. But you can see that at 30,000 we are at the upper end of the cost curve now. Okay. So that means that all of these producers are in the money. So that also means that these mines are all in production, which means that the supply won't go up anymore. It is already maxed out. So if you look at the supply curve and the demand curve, the price is now dictated by demand. Okay. So we need to know, will demand go higher or lower? If it goes higher, that means that the price keeps on going up exponentially because supply won't be able to keep up with demand. And you can also see here that most of this supply is from China, Indonesia a little bit less, but I mean a little bit more to the right. They are high cost, and the rest of Asia, Myanmar and China are lower cost. Now, most of the tin is produced in Asia. For example, in Myanmar, it's 17%, and Indonesia is 26%. And when we look at the Indonesia exports, you can see that these exports are falling. So I think this trend is going to continue to fall. And that would be very good for the price of tin. We also know that Myanmar has political issues. So I expect that Myanmar exports will also fall due to these political issues. Especially some of these tin producers are in the south of Myanmar and they need to go to the north. So I think they will have problems in exporting tin to China. So China has a lot of problems in getting the tin inside because they get it from Indonesia and Myanmar. So I guess they will need to get it from somewhere else. For example, the company that we are going to talk about. Now, this means that tin will be in deficit for the coming years. You can see here that deficits will be around 2,000 million tons here for 2 to 3 years to 2023. So that means that deficits will continue. You can see also that the stock level is going down. And I think that the stock level will keep coming down because of these deficits. And as you see, lower stock level means higher prices. So there's a high chance that tin will be going to 40,000. I can't give you a 100% chance for that, but the probability is very high. Also, you can see here that tin is correlated to semiconductor sales. And we all know that there is a chip shortage. Taiwan Semiconductor is building new plants. They are going to need more chips. We need chips for cars, for electronics. So this is going to keep on growing, and they will need more tin. So there's a lot of chance for tin to go higher. So how are we going to bet on this? I think Alphamin is one of the best producers of tin, and it's in the DRC. So it's not in Myanmar and Indonesia, and China will need to get the tin from Alphamin. Alphamin is the pure tin producer in the world, and it produces 4% of the world's tin. And it's also the highest grade mine in the world. Very high grade. So their margins should be very good. I've looked at the numbers and the PE is around 15. That's not cheap, I know that. But if the tin price goes higher to 40,000, then this PE will quickly go down. And we'll see why. There's also a 10+ year mine life, so that's good. And we will see that the net profit margins will increase a lot when the tin price goes up. Okay, so let's get into the numbers. Also, Sprott owns 5% of Alphamin, so that's a good sign that this is a good company. So the market cap is at 900 Canadian, which is $700 US. You can see that the price has been going down, and now somewhere in 2020, it starts moving up. So I think this cup formation will start going up exponentially. Okay. The debt is at 100 million, but that will be quickly paid off if tin keeps going up. Price to book is a bit high, but well, if the tin price goes up, I think this book value will quickly go up to the price level. And the earnings were 50 million per year, so that gives a PE of 15, which is high, but in the future this will probably go to PE of 10. Equity is now 180, and this will go up to the 700 level in the coming years. EBITDA is the production, which is 13,000 tons. They are building a new tin mine, and which is going to be commissioned this month. So the production is going to go up like 10% in the coming years. So that's good. They have finished the upgrade on that tin concentrated, and so the EBITDA should go up 10% from now on. So the production will go to 13,000. It was at 11,000, so that's this number here, 13,000 times the tin price, 30,000, minus the AISC, which is 12,000. And then we have the EBITDA. Now they only get 75% from that because the ownership is 85% and the payability 93% of the concentrate. So we get about 170 million EBITDA right now. If we do that times 5, then we get our valuation. I always do times 5. Then we have 877 million, and the market cap is only 765. So there's still a little bit of upside from my valuation, so 10 to 20% upside if the tin price stays at this level of 30,000. Okay, so that's the situation now. Mine life is 10. They are exploring for more tin, so this could be extended. Let's take a look at the earnings. So they had negative earnings last year because the tin price was very low. But in Q1 and Q2, we see that the tin price has been rising. So the revenue is rising. Also, the operating profits are rising, and the net earnings are now positive at 8 million. But this is Q1, and in Q1 we had a price of, let's see, this is Q1 of 24,000, and now it is at 30,000. So that's up 30%. So I expect that Q2 will be very good, and so that I calculated this with 9 because they will have 10% more production in Q2 to Q3, and then 4 quarters times 1.4 because the price of tin has gone up. So they will get 50 million earnings per year now, and that's the PE of 15. So their margins are increasing, equity is rising, and let's say that the tin price goes to 40,000, then we go from 872 to 1300. So that's a rise of 600 million. So easily, if tin goes to 40,000, we could easily see a rise of 600 million in this valuation here. So that would almost be a double if tin keeps going up. And I think tin will be going up. So I would say this stock has a potential to go to $1 at least, to this resistance here. So we will see this going up to $1. And the tin price will probably also keep rising to 40,000 based on all of these fundamentals here, especially this one, where the stock level is going down with the deficits, and then the price will be going to 40,000. So this is my suggestion to play the tin market. Just buy the highest grade mine owned by Sprott with the lowest costs of 12,000 AISC. They will have good margins at these prices, and it's outside of Myanmar and Indonesia. So hope you enjoyed this video, and I'll see you in the next one.